Well, hey there, everyone, and welcome back to another episode of Disrupt Your Money. So, today's episode is going to get a little technical, and I'm going to apologize in advance for that because one of the things I really don't want to do on this podcast is get too far into the weeds. It's not because I don't think the details don't matter, they absolutely do, but I'm a podcast listener myself, and I know that I tend to listen to the podcasts that I love in the car or when I'm out on a walk. And that's not really the best format or the best location for me to take in lots of really hefty information that I'm going to need to implement later. So, what I really wanted to do on this podcast was give you tangible, bite sized, actionable stuff that wasn't going to completely overwhelm you. Plus, we obviously want to do all of this in the greater context of what this podcast is about, which is all about fighting for, working towards achieving economic equity. So today's episode, like I said, is going to get a little bit more technical, and that's not normally what I like to do. But the reason I wanted to bring this particular episode to you is because this is such a hot topic in the small business space, in the business space in general, in the tax space. And it's both a sexy topic, but also a topic that gets overused and abused too often. And that is the topic of S Corps or S corporations. Now, if you have no idea what I'm talking about, don't worry, I'm going to explain it to you. If you have a sense of what I'm talking about, please listen to this episode because I promise you there are going to be some good tidbits in here. And I believe very wholeheartedly in S Corps. I love them as a tool and a vehicle for growing your business, for saving money. But I also want to make sure that they're done right because I have seen firsthand the flip side of when they're not. Okay, so first of all, to dive right in, well, what the heck is an S corp? So S corp stands for S corporation, and yes, I'm saying the letter S. I feel like this is Sesame Street, brought to you by the letter S. So S corporations, or S corps for short, are essentially just a tax strategy that can be implemented to save money on taxes. Now, there's a few things that are really important for you to understand here. The first is that an S corporation is not actually a legal entity type. So when we're starting our businesses or we're thinking about getting a legal entity for our business, we're probably thinking about an LLC, which is a limited liability company, possibly a partnership, maybe a corporation or C corporation as they're often referred to. But an S corp or S corporation is not a legal entity type. So you're not going to sit there and go, do I want to be an LLC or do I want to be an S corp? In order to become an S corp, and that's even not a great way to talk about it because it's not really a thing you can become, but in order to make the election to be taxed as an S corp is the appropriate way to refer to it as, you need to have a legal entity already set up. So you need to already be an LLC or you need to be a corporation that can make this election. So, first things first, it is not a legal entity itself. Now, the second thing to understand about S Corps is that it is, in fact, just that. It is a tax election that you're making. It's an election you make with the IRS. You are basically saying to the IRS, hey, instead of being taxed as a corporation or as a flow through entity, which we'll talk about in a second, I would like to be taxed as an S Corp. Thank you very much. There's a form that you file in order to make this election, you file it with the IRS. Most states will just go along with it as long as you filed it properly with the IRS. There are some states that have their own S Corp election forms that you also have to file. So, first and foremost, if it's not already obvious, if you're going to do the S Corp election, please make sure you work with a qualified tax professional or lawyer to do this election for you. And let me be super clear here, not all tax professionals or lawyers are well versed in S Corps. So it's really important you work with somebody who doesn't just understand how to fill out the form, but understands overall what S Corps are and how they have to be managed over time. Now, let's talk about why you might want to make this S Corp election. So, like, what the heck is it anyway? You mentioned tax savings, but what's that all about? I'm going to try to give you a really simple example because, again, I know you're probably walking, maybe you've got the dogs with you, maybe you're driving, and if you're like me, you're a visual learner maybe, so it's hard to hear lots of numbers and stuff coming at you in your ears. But let's take a simple example where you have an LLC, you've formed an LLC for your business, and you have $100,000 in profits. Now, I want to be clear, that's $100,000 before you pay yourself anything. Before you take any money out of the business for yourself, you have $100,000 in profits. In a regular LLC, and by the way, this example holds the same for if you were a sole proprietor. You don't have to have the LLC for this to be the case, but we're going to just use the LLC as an example. LLC with $100,000 of profits, assuming you're the only owner of that LLC, the way that you're going to get taxed on that $100,000 of profits is it's going to do what we call flow through. to your personal tax return. So, like, literally flows up to or down or sideways, however you want to think about it, but it goes on your personal tax return. It gets reported there as $100,000 of business income. We put it on what we call Schedule C if you're trying to geek out on the tax forms. So that $100,000 goes onto your personal tax return and it gets taxed at your personal income tax rates, anywhere from 0 to 35% plus, depending on how much income you have overall. And that's the income tax that you'll pay on that $100,000. But what you'll also pay on that $100,000 is something called self employment tax. Now, self employment tax for non employees, so business owners, people like you and me, is essentially replacing payroll tax for people who are employees. And the payroll tax that employees pay covers Social Security and Medicare. So self employment does the exact same thing. It pays into the Social Security and the Medicare system, 7.65% in total for the employee portion. Because remember, you're not an employee anymore. So you got to kind of pay that in now that you're the business owner yourself. But what self employment tax also has or also covers is an additional 7.65% into the Social Security and Medicare systems. Now, you might be wondering, well, what the heck? Why is it doubled? Why is it twice as much as when I was an employee? And the reason is because when you were an employee, if you were ever an employee, your employer paid the employer portion of Social Security and Medicare. So Social Security and Medicare in total is actually 7.65 from the employee side and 7.65 from the employer side. When you were an employee, if you were an employee, you only paid 7.65% and your employer paid the other 7.65%. Now that you're a self-employed business owner, you have to pay that full amount, both the employee and the employer portions of Social Security and Medicare. So on that $100,000 of profit, you're going to pay your income tax rate, and you're also going to pay your Social Security and Medicare on those profits. Now, let's say that you decide to make the S Corp election for that same business. So now you have that same $100,000 of profits, but you've made the S corporation election. How does that get taxed? Well, there's actually two ways or two components, I should say, that $100,000 breaks out into. The first component is what we call reasonable compensation. I'm going to talk about reasonable compensation in a second because it's the critical piece to the S Corp election. But just for right now, go with me here that reasonable compensation is essentially the salary that you're going to pay yourself because once you make the S corporation election, you essentially become an employee of your company. Just trust me on all of this. We'll break it down in a minute. So let's just say that we decide your reasonable compensation is going to be $60,000. You're going to pay yourself $60,000 of that 100,000 that you have from your business, and you're going to pay it to yourself via payroll. It's essentially going to be like if you're an employee, you're going to get a paycheck. It's going to have taxes taken out. It's going to feel like back in the days if you ever were an employee. Now, on that $60,000, you're going to pay income tax just like you would have in my first example, and you're going to pay that self-employment tax, except this time it's not self-employment tax. It's called payroll tax because you're now an employee, but it's the exact same amount. It's at 7.65% for the employee portion, and your business is going to pay the other 7.65% for the employer portion. So that $60,000 is going to get taxed exactly the same in either example. But what about the remaining $40,000? Well, when you've made that S corporation election, here's the cool part. That $40,000 is only subject to income tax at your personal income tax rates. It is not subject to self employment or payroll tax anymore. So you're going to save that 7.65% on the employee side and that 7.65% on the employer side as well. And that can be a pretty big savings depending on how much profit you have. So, that in a nutshell is what the S Corporation is. So, the reason why people make the election to be taxed as an S Corporation is to shield some of their profits from those self employment or payroll taxes. Now, let's dive back to that reasonable compensation piece because that is the really critical piece. If you followed the examples along, you might imagine that if you make the S corporation election, you want your reasonable compensation to be as low as possible because your reasonable compensation is the amount that is subject to both income tax and those self employment or payroll taxes. That makes sense. That's logical, right? Well, on the flip side, the IRS wants that reasonable compensation to be as high as possible, or if they're not really trying to be malicious, maybe not as high as possible, but they want it to be reasonable. They want it to be in line with the services you're providing for your company. So if you have a business where you have $100,000 in profits, and you say, okay, I'm going to set my reasonable compensation at $5,000, the IRS is probably going to knock on your door and go, I I don't think so. You really need to prove to us why you're only getting paid $5,000 for the services you're providing in that company. So when we come up with your reasonable compensation number, which by the way is a service that we provide as part of our S Corporation election package, when we come up with that number, it's based on what is reasonable for the services that you're providing in your business for the type of work that you do. And we don't just pick a number out of a hat. We actually do a lot of work behind the scenes. We ask you a ton of questions about exactly what you do in your business, how many hours you do it for, what your proficiency level in it is. We look at industry wage data, we look at tax court cases, we look at a bunch of other reference materials, and we come up with a number that you can put on payroll for yourself to pay yourself that reasonable compensation. And the cool part about what we do is that that number is defensible in front of the IRS. What does that mean? It basically means that if the IRS ever audits you, it's not guaranteed that they'll agree with your number, but you have this nice, really robust report and analysis to hand them to say, here's how I came up with this number. So that leads me to one of my critical points, which is if you're going to do the S Corp election, I already told you don't do it alone. But it's not just about that form and filing that form correctly. It's also about making sure all these other pieces are done correctly as well. And the reasonable compensation is one of those critical pieces. So if you're working with somebody to do your S corporation election, make sure that they either do this reasonable compensation analysis for you, and by the way, that they're experienced in doing this reasonable compensation analysis, or that they can point you to somebody who can do it because you want to make sure it's done by a qualified professional. Now, a couple of other things to keep in mind with the S corporation election. So you don't just make this election, pay yourself some money, and call it a day. Once you've made the S corporation election, things become a lot more strict. So at this point, and by the way, a lot of this stuff is stuff you probably are thinking about anyway when you have an LLC or corporation, because again, you have a legal entity now and things should already be separate between the business and yourself personally. But with an S corporation, it becomes even more important because you truly are now an employee of your company. There are a lot of rules around types of expenses that can be deducted for S corporation owners, how things get structured, and all of that. I'm not going to get into all that because I want y'all to actually enjoy this episode. But it's really important that you work with a qualified tax professional who can help you understand all of those specifics. The one thing I will say about S corporations is there is more administrative work. The biggest thing that comes to mind is an S corporation now has to file its own tax return. So if you had an LLC before, and you didn't make the S corporation election, or you were sole proprietor, you just reported those profits or losses on Schedule C on your personal business return. But now, if you make the S corporation election, the S corporation has to file its own tax return. Now, it is an informational return, meaning it doesn't pay tax on that return. It's just providing information to the IRS and to the state, but it is still a really critical thing that you have to do. And again, it's important to work with a qualified tax professional because a lot of tax folks that do individual tax returns that include Schedule C businesses don't do S corporation returns. And a lot of folks who don't or who are who do the individual tax returns and then try to do the S corporation returns for their clients screw them up if they're not familiar with S corporation returns. S corporation returns are not as simple as the Schedule C that we file with your individual tax return. So that's why it's really important that you work with a tax professional who understands S Corps, understands not just the tax filing forms, but all the specifics about them. So that's the first thing that can be a little bit more of a burden. It's going to cost you a little bit more money because you've got to pay somebody to prepare that return. You have to make sure, excuse me, that you keep really good records and you've got a lot of information. So there's just more admin work there. And the second thing is you have to put yourself on payroll. So if you're the only employee working in your business, you probably don't have a payroll system already. In fact, if you just have a single member LLC and you're not an S corp, you probably shouldn't be paying yourself on payroll. It's a waste, it's not necessary, and it actually confuses things. So if you're the only employee in your business, you're going to now have to pay for a payroll system, and that's an extra cost. Plus, you got to do payroll now. There are some pretty easy tricks to doing payroll. Payroll in my business is pretty simple, as it is for most of our clients, because we use a really good tool that we love called Gusto. You can sign up for a Gusto account by going to megkwheeler.com/Gusto. We love Gusto because it makes payroll really easy, but it's still an extra administrative step and it's still an extra cost for the payroll system itself. So keep that in mind. The third piece about the S Corps that I'll just kind of mention, and I sort of alluded to this earlier, is that there are different rules about how you have to account for certain deductions and how you have to treat certain things. Again, I don't want to go down the rabbit hole of all of those specifically right now. Find and work with a qualified tax professional who understands this stuff. But just know there's going to be an extra layer of administrative work to do things that you may be doing now that are much simpler. Okay. Now, all that's to be said, I actually love S corps. I love the S corp election. I love this tax strategy for a lot of our clients because it is a great way to shield some of your profits from self-employment or payroll tax. So that is fabulous. Let's talk about where S corps go wrong, or frankly, where the profession is letting down people when it comes to S corps. And a lot of it has to do with the online world and the fact that there is just so much information out there now. Everybody and their mother is on TikTok doing some kind of video about how you can save money, especially when it comes to taxes. And let's be honest, most of those people are completely full of shit. They either aren't qualified to be talking about this stuff at all, or they maybe technically have the qualifications, like they're a CPA or they're a tax advisor. But I'll be honest, they don't really understand what they're talking about. And I hate to put down my profession in that way, but understanding S Corp specifically takes time. It takes a lot of education. It's just like with a doctor. You wouldn't go to, I don't know, a foot doctor for your brain, right? Because a neurologist is going to have studied, you know, their sort of specific area for much longer. And so I want you to be really careful as you're listening to people in the online world, especially when it comes to them talking about, oh, use this tactic, use this trick to save money. We are very clear when it comes to the S corporation election that we love it, that it's a great tool, but it doesn't make sense for everybody. And that's why when you come to work with us, we have an S corporation election quiz, which we will link to in the show notes so you can actually go through. It's only a few questions. And you answer those questions, and we will give you an indication of whether or not the S corporation election makes sense for you. But we also offer S corp intro calls because I want you to get on the call with me and let's talk it through and make sure it makes sense for your specific situation. I have had clients come to me who have had S corporation elections done from them in the past, and it was the completely wrong decision. Let me give you a couple of examples. First of all, and this is a group of people, this is not one specific client, so nobody should feel singled out. But I have had clients come to me where somebody put them into an S corp election. I can't talk anymore. I'm so riled up. I can't even use my words right now. Somebody put them into an S corp election when they first started their business, and they didn't need it. They weren't making enough money to justify that extra administrative cost. And so here they are a few years later, and they've got this S corp election. They've got to pay extra money to do a return every year. They've got to pay for payroll. They've got to do all this extra work and spend all this extra money, and they still aren't benefiting from the S corp itself. So I've had that happen with more than a handful of clients, and it makes me so mad. The other type of clients that I want to talk about, and this is a specific person, but this person knows I use this as an example because this comes up with a lot of people who come to us looking for an S corporation election. And this is because of the example I'm going to tell you is because of a fairly unknown um, code section of the tax law. Not to geek out on tax law with you, but there is a code section that talks about what happens essentially when you make the S corporation election. Now, here's the thing: if you have more debt in your business than assets when you make the S corporation election, you will have a tax hit. So, what this code section does is it says that when a corporation sells or transfers its assets and liabilities. Liabilities would be things like debt, credit cards, loans, etc. When a corporation transfers or sells its assets and liabilities, if the corporation has more liabilities than assets, so I have $10,000 of credit card debt and I only have $2,000 in my bank account, I would have more liabilities than assets in that case. If that happens, then the corporation that's selling its assets and liabilities has a tax hit on the gain. Because think about what's happening here. If I have $10,000 of credit card debt and $2,000 in my bank account, and I give you my $10,000 of debt, it's now yours, you take it on, and I give you my $2,000, well, what just happened? I benefited by $8,000, right? Because yeah, I gave away my 2 grand in cash, but I also got rid of my 10 grand in debt. So I'm up great. I'm up 8 grand in the whole big scheme of things. That $8,000 gain in that scenario is going to be taxable to me. Now you might be saying, well, hold on. Why are you talking about this? We're talking about doing an S corp election. We're not talking about selling assets and liabilities. But here's the thing: when you make the S corporation election for paper purposes only, meaning none of this actually happens in real life, this is just how the IRS interprets the S corporation election. Is the IRS interprets you making the election as your business selling its assets and liabilities to a new corporation. If you're listening to me and not watching me, you can't see that I just made bunny ears when I said new corporation. The new corporation doesn't actually exist. None of this is legally happening. This is just like in the IRS's tax world, you're selling assets and liabilities to your new corporation, the S Corp. But again, remember the S Corp isn't a legal entity, so none of this is actually happening in the real world. This is just happening on paper. But because the IRS interprets the S Corporation election to be the sale of assets and liabilities of the original corporation to the new S Corp, again with bunny ears, there can potentially be a gain if you have more liabilities than assets. So if that's your situation, if you took out a loan, and by the way, I'm seeing this with a lot of clients who took out SBA loans because they took out an SBA loan during the pandemic and now they have more debt than they have assets. If that's you, you may not want to make the S corporation election because you're going to get hit with a tax bill for the gain. Now, some of you, it may still make sense to do. I have actually had a couple of clients who have more liabilities and assets. They're going to get a tax bill for making this election, but it's small enough, or for some reason it makes sense because of the timing to just go ahead and do it, even though they're going to get that tax bill. Again, though, that's something that should only be decided after having a conversation with a qualified tax professional. I know that just went super tech or technical, I should say, and I promised I wouldn't go super technical, but I just want to put that warning out there because again, I've seen so many people get pushed into S corporation elections when they don't make sense, and that leads to another thing. And I actually did a TikTok on this because this pissed me off so much, and I'm not going to name names, but there are some companies out there right now whose entire model is based on having your company make the S corporation election, and then they're going to do your taxes and your bookkeeping. But literally, the first step in the process of working with them is making that election. Here's what's so scary about that for me from 2 points. Number one, their entire marketing strategy is about how great this election is and how they're going to save you all this money because you're going to make this election and blah, 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 blah. What's scary about that is when that is your only answer, and somebody comes in and wants to work with you, I feel like you're less inclined or there's less motivation to hold up your hands and go, actually, this isn't the right fit for you. Now, I'm not saying that these companies are putting people into S Corp elections that they shouldn't be. I don't know enough to be able to say that they're doing that or not doing that. I just have my suspicions. But that worries me just on its face because, again, if that is their only process, then they're more motivated to push you into an S corporation election. The other thing I don't love about that sort of model is, well, what if you decide down the road an S corporation election actually doesn't make sense for you anymore? All of a sudden you can't work with them and now you have to back away from this relationship that maybe you've had for a few years and start fresh with somebody new just because they're like, well, you don't work in our perfectly, sort of designed and skinny model that we have. So again, I just want to put that out there because I want people to understand that the S corporation election is not like the magic, pot of gold that it's going to work for everybody and it's always going to make sense. And again, I can't stress this enough. That's why you should work with and talk to a qualified tax professional who understands S corporation elections. In fact, if you want to find out how well they understand them, ask them, is there any penalty if I have more liabilities than assets? And like probably 90% of CPAs are going to go, because it's just not something that if you don't do S corporations a lot, it just, you don't think about. Okay, I've droned on enough about the technical aspects of S Corp elections. We got a few questions, a few listener questions about S Corp elections that I wanted to make sure I addressed. So the first one we got, I've already answered this one, but is an S Corp a separate entity? Nope, it is not a separate legal entity itself. So, and I probably should explain this and stress this. If you have an LLC and you make the S Corporation election, you still have an LLC. Nothing has changed. I'm not a lawyer, but nothing has changed in terms of your legal entity and any liability protection benefits that may or may not come with that entity. Okay. The entity itself has not changed. Same thing if you have a corporation, a C corporation, and you make the S corporation election. Nothing's changed with the entity type itself. All that's changed is how the entity is taxed. Another question we've got here. To date, I've only made $20,000 in my business, but I'm on track to at least triple this year. Should I go ahead and become an S Corp now or wait until next year? So let me start this question off by saying I can't answer this question. I don't have enough information. And I'm glad you asked, whoever asked this question. I don't want to shame the person. I'm very glad you asked the question. But it's not that simple. And this is why I also get very nervous when accountants will say, "Oh, if you make more than 50K, talk to us about the S corp election. If you make more than 70, whatever." I mean, yeah, I get it. It's a starting point. And if they're framing it like, come talk to us so we can do an analysis, great. But again, you got to be careful because the only thing, or I should say, um, it's not just about how much money you're making. It's about a lot of other aspects as well. One thing we haven't even touched on are some of the ownership limitations of S corporation elections. S corps can only have 100 or fewer owners. The owners can only be individuals or some trusts and estates. They can only be U.S. Persons. They cannot be foreign. So just right there, if you have owners who are non-US individuals or non-individuals, you can't do the S Corp election. You also can't have multiple classes of stock with the S Corp. So if you want to bring in investors, if you want to raise funds, if you want to have, raise capital in your business, probably not going to want to do the S corporation election because that's going to create some issues for you as well. So again, there's a lot more than just how much money are you making. That said, I think this brings up an important point in this question, which is to date, this person has only made 20 grand, but they expect to triple this year. The S corporation election must be filed by March 15th of the tax year in which you want it to go into effect in order for it to go into effect. Now, you can do what's called a late filed election, typically up to 3 years after the date you want it to go into effect, but it's not guaranteed that it'll get accepted. And you usually have to show that you've been operating like an S corporation. You just forgot to file the form, which, by the way, means you put yourself on payroll. If you haven't been on payroll, it's a lot harder to do that late filed election. So just get it in your head that if you want to do it for the tax year that starts January 1st, you need to file that form by March 15th. So it is a good idea to kind of think ahead and think, okay, I know based on last year, maybe it wouldn't make sense to do the S corporation election, but this is what I'm projecting for this year. And I know I got to make that election by March 15th. So let me think about that. Does that make sense to do? Again, I think you have to weigh when your current revenues aren't where you think they should be to make the election worth it. I think you really have to weigh how likely you think it is to hit the revenues that would be worth it, and how much of a balance there is between where your revenues are and the administrative work. If you already have employees, and so setting up a payroll system, it's already done for you, and it's not that much of an extra cost, that limits the additional admin work that you're going to have to do with the S corporation election. So maybe it makes sense for you. Again, I think this is when you need to talk to a qualified tax professional because there's just a lot of other factors there to consider. Okay, so let's see what else. Why do my profits matter when making the S corp I can't talk today. Election, we've already kind of talked about that, but again, it's because the S corp election tax benefit only kicks in after you've paid yourself reasonable compensation. So let's go back to my example where you had $100,000 of profits. If your reasonable compensation is determined to be 60K, you still have 40K of profits that can be shielded from the self-employment tax. But if you only had 30K of profits and we determine you need to pay yourself 60K, well, all of your profits are going to be eaten up going to pay yourself through payroll. You're not going to have any profits left over after that reasonable compensation to benefit from the S Corp tax benefit. So in that case, it doesn't, at least based solely on that one factor, doesn't make sense to do that S Corp election at that time. Let's see, we talked about all of that. I just want to make sure we get all these questions answered. Um, so again, if you have questions about whether or not it makes sense to do the S corporation election, here are your actionable to-dos from this episode. Number one, head to our website and check out our S Corp quiz. It's just a few questions, and it just is a good starting place to see, does this make sense for me to consider or not? The next step would be to consider booking a call with us if you think it makes sense to do the S corporation election. We also, I should mention this as well, we also actually offer just reasonable compensation reports. So if you're kind of on the fence about it, you're like, well, I don't know. It kind of depends on what my reasonable compensation comes back at. We can actually do that analysis for you. And if you decide to go forward with the S corporation election, we'll apply the cost of it to that package. And if not, at least then you have that knowledge. So something to consider. And again, head to megkwheeler.com to check out all that information. I think we've already talked about all this stuff. So this is good. So again, I want to just stress that the S corporation election is a really great tax planning tool, but it is not for everybody. And you've got to be really careful, especially in this day and age, taking advice from everybody and their mother who's over on TikTok or wherever, putting all of this information out there. If anybody is pushing S corporation elections as their only tool or as like the thing you have to do, you should be very afraid and you should run because they are not a one size fits all. They do not work for every client. They do not make sense for every client. And you need to work with a qualified tax professional who understands them, not just how to file the election form, but the whole process, the whole thing behind it to make sure that you're continuing to manage that S corporation election so that it actually doesn't get revoked, because that's a whole separate issue that can happen. Okay, so I think that's everything I wanted to touch on. I know we're already running pretty long on this episode. I figured we would because S Corps are a really weighty topic. Again, I've offered you some resources to get more help on these. Let me just wrap it up by saying this. This is one of those things that often scares people, this type of topic, because it feels very next level, it feels very complicated. And this is one of those topics that a lot of times people kind of shut down on because it just feels too hard to figure out. If you are going to grow a truly financially successful business, if you are going to build incredible wealth, to achieve the change that you want in this world, this is the kind of stuff that you have to start thinking about and talking about. And this is why it's so important to have a qualified tax professional on your team. Now, I'm not trying to make a plug for us. Certainly, we'd love to work, with you. We offer that, those types of services to folks. But more importantly, just have somebody that you trust that is on your team that you can talk about these things with. Because the number one biggest mistake I see people make is either, I guess it's two mistakes, is either they stick their head in the sand and they just ignore this stuff completely and they miss out on a lot of opportunities, or worse, they listen to somebody who doesn't really have a clue what they're talking about and just kind of takes their money, does like one thing and runs, and then they're left with this big pile of shit that doesn't really do them any good. So again, biggest piece of advice is find somebody you trust, find somebody who's qualified that you can work with, whether that's us or somebody else, so that you can get the advice that you need. So thank you so much for listening to another episode of Disrupt Your Money. We went so long, I didn't have time to do any of the other fun stuff, but I do want to do a plug and just mention that if you have any questions on the biz money stuff, or really any money or financial stuff, or if you have any comments about economic inequity or what's going on in the world or whatever, please head to our website, disruptyourmoney.com, and leave us a voice message. We will potentially air it in an upcoming episode. If you don't want to give us your voice, feel free to send us a DM or a text or an email. Again, just head to disruptyourmoney.com to get all the details for that. And then otherwise, we'll be back here next week for another episode of Disrupt Your Money. In the meantime, keep doing what you're doing. Please keep asking questions, keep building that wealth, keep fighting for change. And we will do the same. We're here alongside fighting with you. Until next week.
Thanks for listening to Disrupt Your Money. If you have a money question you'd like answered in a future episode, go to disruptyourmoney.com. To support the podcast, please rate and review it wherever you get your podcasts. And if you want access to all of my free templates, checklists, resources, and guides, click the link for the Biz Money Library in the show notes.